Okay, let's take a few minutes to do an introduction to job costing systems. So first of all, let's talk about the two types of product costing systems that we have. One is called process costing, and we'll talk about that in another video. But primarily the differences between process costing and job order costing is process costing is a system that is best used by companies that produce many units of a single product, and when one unit of output is indistinguishable from other units of output. Because the units of output are identical, the company tends to use an average cost system to determine product cost. So here's an example here. Coca-Cola, I think, is a great example. So if they're going to run Coca-Cola on a product line, they're producing, just bottles and bottles and bottles of Coca-Cola. I also have here Reynolds Aluminum, so they would be running aluminum over a factory process, and a paper manufacturing company. So they're going to produce a lot of units of a single product, and each product is indistinguishable from the other types of products. Now, under a job order costing system, this is when a company has many different products that are produced each period. So they're unique and custom every time, or often, let's say. So the products are typically manufactured to a customer's specifications and are unique in nature. Examples, they've got Boeing, so each and every aircraft tends to be slightly different. A construction company, if you think about each and every house they might build, or each and every construction project should be unique and individual, or movie production. So here's a slide that compares the differences between job order and process costing. So the costs are accumulated by the job in a job order cost system, and by the department in a process system. So if you think of building a house, you can see how easily you can accumulate costs for a particular house, even though you might be building more than one house at a time. But if you're Coca-Cola, the cost would be accumulated by department working on each current batch. Let's take a couple of minutes here to just talk about how the costs flow from in a job order costing system. So we're accumulating our manufacturing costs. Now remember, total manufacturing costs are equal to your raw materials plus your factory labor plus your manufacturing overhead. So as those products are being produced, the costs are accumulating. And then I should say accumulating in work in process. So we will pull all of those individually into work in process. And then as that product is completed, you credit your work in process, debit finished goods inventory, and then it moves out of finished goods with a credit and a debit into cost of goods sold. Okay, so here's an example of a production schedule. So most companies also produce stock inventory for products that they sell on a regular basis. So they want to have stock available to quickly fill customer orders. So they need to be able to forecast demand for the product, and then estimate the number of units that should be produced during a given time period. So this production schedule will indicate the quantity and types of inventory that are scheduled to be manufactured during a period. The production schedule is very important in helping management determine the direct labor and direct materials that will be needed during the period. Then we have here an example of a bill of materials. So engineers might produce a bill of materials for requesting raw materials needed to fill a job. You can think of the bill of materials as like a recipe card. It simply lists all the raw materials needed to manufacture the job. Then purchasing can take this information, and they will know how much stock they need to have available. That will help them determine their purchasing needs and make sure that raw materials are on hand by the production date. So here's an example of the actual purchasing process. So the purchasing department would determine the ordering needs, and then they would issue a purchase order. Once that went to the supplier would ship the units, which would be received in the receiving department, and they would prepare what's called a receiving report. Accounting then would get that receiving report and match it up with the purchase order and the invoice from the customer, and then they would actually go ahead and pay the invoice. Okay, what we have here is an example of a job cost record. This is where we accumulate all the costs of direct materials, direct labor, and manufacturing overhead allocated to a specific job. So each and every job that we are doing, let's say we're Ace of Cakes and we're making cakes, we would keep a job cost record so we can keep track of the materials that go into that particular item, the labor, the time it takes to produce that particular cake, and then we would assign out manufacturing costs as well. So the job cost record usually also contains details about what happens to the units in the job after it's been completed and sent to the finished goods warehouse. These details include the date and quantity of units shipped to customers, the number of units remaining in finished goods inventory, and the cost of these units. The balance of unsold units from completed job cost records sum to the total finished goods inventory on the balance sheet. Here we have what's considered a materials requisition form. It will show the parts needed, and each time then that production needs some raw materials, it will fill out this materials requisition. It's a form for itemizing the raw materials currently needed from the storeroom. The materials requisitions are typically electronic forms that authorize material use. They also serve as a useful source of document for recording materials usage. So as soon as the materials requisition is received by the raw material storeroom, then the workers will pick the appropriate materials and send them to the factory floor. Storeroom workers then remove the items from raw materials inventory that are needed by production. Here we have what's called a raw materials record. So the unit cost and total cost of all materials picked are posted to the materials requisition based on the cost of information found in the individual raw materials records. So the individual raw materials records are updated as soon as the materials are picked. In most companies, this mundane task is now performed automatically by the company's computerized barcoding system. Then finally, the raw materials requisition for the job are posted to the job cost record. So each time raw materials are requisitioned for a job, they are posted into the direct materials section of the job cost record, and they're considered direct materials rather than indirect materials because they can be traced specifically to a job. By using this system to trace direct materials to specific jobs, managers know exactly how much direct materials cost is incurred by each job. Then we have here a showing the direct materials and direct labor that have been posted into a job. And then there are some items that can't be specifically traced to an individual job. That's our manufacturing overhead, which would include things like depreciation on the factory plant and equipment, utilities to run the plant, taxes, insurance, maintenance, salaries of janitors and supervisors, machine lubricants, and so on. So since we can't specifically trace these items back to a specific job like we did with direct materials and direct labor, we have to allocate some reasonable amount of cost to each job. And generally accepted accounting principles mandate that manufacturing overhead must be treated as an inventoriable product cost. So that brings us to actually assigning our overhead costs, and I will preview that in the next video. Thank you.